Critical Metals Corp, trading under the ticker CRML on the NASDAQ, is currently sitting at 17.65 USD as of 4 p.m. ET on Tuesday, January 20th, 2026. This represents a solid intraday climb of 0.40 USD, or a 2.32% increase for the session. While a 2% move might seem like standard fare for a small-cap mining play, the reality beneath the surface is far more complex than a simple green candle on a chart. Most investors see this as just another lithium and rare earth junior miner riding the wave of the green energy push, but the actual tension in the market right now stems from a massive disconnect between the company's aggressive operational milestones in Greenland and a looming share supply overhang that could change the math for everyone involved. You might expect that hitting a string of high-grade assay results and starting construction on a pilot plant in the Arctic would send a stock into a permanent vertical climb, but the market is currently pricing in a very specific kind of anxiety. The expectation is that Critical Metals Corp is the West's answer to China's dominance in the rare earth sector. The reality is that we're watching a high-stakes race between physical project development and the constant need for fresh capital. Even as the stock trades up today, savvy traders are keeping a close eye on the recent move by European Lithium to offload millions of shares to institutional buyers. This creates a fascinating setup where the company is technically succeeding on the ground, while its cap table undergoes a violent reorganization. Before we get into the long-term mining plans, we have to talk about what is happening with the price action right now. The stock has been exceptionally volatile throughout the start of 2026, gapping up on news and then facing immediate pressure from sellers looking for the exit. We are seeing heavy institutional activity, with entities like Fidelity and Schwab Intelligent Portfolios frequently cited in broader discussions around critical mineral exposure. Many retail traders using a Fidelity brokerage account or the Robinhood app have been drawn to CRML because of its explosive potential, but the intraday swings, like the one we saw on January 14th where the stock hit 19.05 before retreating, suggest that the big players are the ones really moving the needle here. If you are into self-investing or use an individual brokerage to manage your own picks, you know that timing these entries on a stock like this is like trying to catch a falling knife that's also on fire. The most recent catalyst driving the 2.32% gain today is likely the anticipation of the upcoming business update call scheduled for January 22. Investors are looking for more than just everything is on track. They want concrete details on the Tanbreez project's financing and the exact status of the Greenland pilot plant. There is also a persistent whisper in the market regarding the political landscape. With the current administration in Washington making strategic resource security a top priority, there is speculative interest in any company with a massive footprint in Greenland. Some are even betting on the idea that the U.S. might increase its direct involvement in securing these deposits to bypass the traditional supply chains. This isn't just about digging rocks, it's about global chess, and Critical Metals Corp is a very important piece on that board. Comment below how many shares of Critical Metals Corp you currently hold, or if you're waiting for a dip to 15 USD before entering. For those of you looking at online investing sites or trying to find investment help with small-cap miners, the technicals here are screaming caution. We've seen the stock trade well above its 50-day moving average of 9.23, which sounds great until you realize it's still nearly 50% down from its 52-week high of 32.15. This suggests a lot of trapped investors at higher levels who are looking for any rally as an opportunity to break even and get out. This creates a ceiling of resistance that the company has to blast through with truly exceptional news. The volume today has been decent, but we aren't seeing the massive 50 million share days that characterized the early January run. It feels like the market is holding its breath. Let's break down what this company actually does and why it matters. Critical Metals Corp is effectively a dual-threat miner. On one hand, you have the Wolfsberg Lithium Project in Austria. This is billed as Europe's first fully permitted lithium mine. In a world where every European automaker is trying to secure a local supply of battery-grade lithium to satisfy regional regulations, Wolfsburg is a golden goose. They have offtake agreements with names like BMW, which provides a level of institutional credibility you don't often see in this sector. If you use Interactive Brokers or SoFi Invest to track the battery metals sector, you'll notice that most projects are still stuck in the permitting phase. Critical Metals is past that hurdle in Austria, which is a significant reality check against the skepticism often directed at junior miners. On the other hand, you have the Tanbreez project in Greenland. This is the heavy lifter. It's one of the largest rare earth deposits in the world, specifically rich in heavy rare earths like dysprosium and terbium. These aren't just buzzwords. These are the materials required for high-performance magnets used in everything from EV motors to missile guidance. The company recently confirmed high-grade intersections at the Fjord deposit, with results showing up to 0.77% total rare earth oxides. For context, many comparable projects are considered viable at much lower grades. The reality here is that the resource is objectively massive and high quality. The expectation of the market, however, is that mining in the Arctic is a logistical nightmare that will inevitably lead to cost overruns. To counter that, the company is moving towards a pilot plant model. They've already started construction and acquired a mobile lab to speed up their 2026 drilling results. This is a smart move. Instead of waiting for a multi-billion-dollar facility to be built, they are proving the process on a smaller scale. This de-risks the investment for the big institutional funds that handle things like Fidelity Wealth Management or Fidelity IRAs. It shows that the management, led by Tony Sage, understands they need to show proof of life to the market regularly to keep the stock price supported. However, we have to talk about the risks. The financial health of the company shows a current ratio that would make a traditional value investor lose sleep. With a current ratio of around 0.13, the short-term liquidity is tight. They're essentially living on the next round of financing and the exercise of warrants. This is why you see so much volatility whenever they announce a new deal. Every time they bring in cash, it usually comes with some form of dilution or a large block of shares being sold by an early partner. If you're using a robo-advisor like the SoFi Robo-Advisor or Schwab Intelligent Portfolios, you might not even see this stock in your mix because it fails many of the stability filters used by automated algorithms. This is a stock for the active trader, the person using the Robinhood trading platform or Interactive Brokers to execute specific, high-conviction plays. Looking at the broader sector momentum, the lithium market has had a rough couple of years, but 2026 is widely seen as the year of the rebalance. We are moving away from the massive oversupply of 2024 and 2025 as older, high-cost mines shut down and new demand from grid-scale energy storage systems kicks in. Critical Metals is positioning itself to be the producer that comes online just as the market shifts back into a deficit. This timing is their greatest asset. If they can get through the next 12 months without another massive dilutive event, they could be the primary beneficiary of a renewed commodities supercycle. But here is the contrarian view. Is the Greenland geopolitical story too good to be true? We often see retail investors get caught up in the strategic national interest narrative. They think because a project is important for the military or for national security, the stock price is guaranteed to go up. In reality, the government doesn't care about your portfolio. They care about the minerals. Sometimes these companies get bogged down in years of environmental litigation or geopolitical posturing between Denmark, Greenland, and the U.S. While the current momentum is positive, the risk of a permitting pause or a change in local government sentiment in Greenland is a tail risk that most investors aren't properly weighing. The institutional activity is also telling. We see large positions being added by funds that specialize in the energy transition, yet the average analyst rating remains a sell or hold on sites like MarketBeat. Why is the discrepancy? It's because the analysts are looking at the balance sheet while the fund managers are looking at the rocks. This creates a tug of war. If you are using Fidelity ETFs or Fidelity mutual funds to get broad exposure to the sector, you are likely diversified away from this specific risk. But if you are doing individual brokerage trading, you are picking a side in that fight. Are you a rocks person or a balance sheet person? As we move towards the business update on January 22, the market is expecting a beat on operational news. If management announces a new major offtake agreement or a strategic investment from a sovereign wealth fund, perhaps from the Middle East, given their recent joint venture talks in Saudi Arabia, the stock could easily retest the 20 USD level. However, if the call is just a rehash of old data, expect the reality of the share overhang to pull the price back down towards the 14 USD support zone. The tension between these two outcomes is what is keeping the daily volume so high. In terms of self-investing, the move here is to watch the volume on the 17.50 level. Today's close at 17.65 is a positive sign, but it needs to be backed by a consolidation period. We've seen too many fake-out rallies in the mining sector lately. Using tools like the Fidelity mobile app or the Robinhood app to set price alerts at 18.20, the recent local high, might be a smarter way to play the breakout rather than trying to guess the bottom. Online investing is about discipline, especially in a sector as predatory